What's going on, everybody? It's Rob here from Precision. I wanted to do a trade recap of a couple trades I took yesterday. Now, if you already haven't, definitely subscribe to this YouTube channel. There'll be more recaps and more educational stuff coming. I'll keep this really simple since it was a rather simple setup. Obviously, our momentum is down. We're still looking for more downside action. So we got a couple areas of interest. Right away, I want to note that we took out this buildup. In doing so, we created an inducement high. With the creation of this inducement high, we look like what is momentum coming up. So a lot of people actually started buying here. And these are what I call vector candles. Just means they're very momentous candles. They're not pulling back. You can see at the same time here, we're creating build up to target. So this is the future target down here. To the left, we have this area of imbalance. So anytime I get liquidity and imbalance together, it's going to create a heftier reaction. Now, if we really look here, our momentum's down. The candles down have been more erratic than the candles up. If we took the build up here and this high goes, there's a pretty good probability that price is going to continue in the direction of momentum. Now, there was a really clean buy here. I don't get to the charts till about 4:30 a.m. So obviously I didn't have a chance to catch the buy, but the buy here at the bottom was super simple. All right, so let's break this down. So I'm at the charts, probably around here somewhere. So nothing's really happening. We still have momentum up. We're really not interested in taking anything until we take some serious liquidity. This is kind of the only area that I'm really willing to sell from. So this came here, we got a massive reaction on the 15 right off the bat. We get exactly what we want to see. We get this rejection candle followed by a bearish on the 5. Now we can go down to the 1 and just kind of keep an eye on it. And a couple ways of entering here. If you like living on the edge or you're more risk adverse, you probably could have entered here. Myself, I wait for price to develop a bit and give me a confirmation entry. So here, price creates a little more buildup to the downside. So I want you to really keep an eye on how we're stacking liquidity. This is giving us confidence to keep selling. This is telling us TP1 is at this buildup here. So basically the way this is stacked, this is a clean sell all around. The buy was just to induce people. So if we just play this forward, basically anywhere in the 50% range or so of this impulse down, we're willing to sell. There's a couple ways this can sell. The first way is we hit the 50 and we sell. The second way is what I call is a initial reaction. So this would be a valid sell if price does this. If price came back, took this out, this would be a valid loss and a re-entry. So the initial reaction can be future inducement. So this is a pretty textbook setup here. So we hit that 50, we get our last candle into it, we get a bearish engulfing. So this is my first trade here. Now, if price comes above this high, it's invalidated to me. It's either gonna look for another reaction and use this as the inducement, or we're gonna come up higher and take this liquidity here. For targeting, we ended up holding this right to this low. TP1 is always going to be around the halfway mark, wherever a valid area that's reactional is. So that's 50% off at this TP. It took a while to get there, but it does eventually get there. Now, again, price is creating future liquidity for a buy up at some point. Obviously, we do not expect that to happen today. Again, you can see the amount of momentum we're coming down with. So this is actually where I took the stack. So the stack, the same thing. This creates what I call breaker liquidity. So one of two things can happen here. This is my 3-candle pattern. It's one of my entry patterns. I executed this because this is kind of a poorly priced sell. And there's also a possibility of taking this breaker liquidity. We know we can take a loss here. So this is a bit of a sketchier operation due to the fact that the pricing's not the greatest. We're just hoping the momentum follows through. This one does work out for me. If it didn't, then it took this high and reacted, I would likely re-execute this without a problem. What I wanted to say was, if you do stack something like this, this bottom entry is not one you want to hold. You want to dump this position as quick as possible, full volume. So our first reactional area being this build-up, you don't want to really hold. You don't want to really hold past that. If you do hold past that, I would take 80% off or something heavy, because what usually happens is, well, I shouldn't say usually, but what can happen is something like this and continue down. So I don't hold stacks. I hold the better priced sells. So basically fully closed here, 50% off on the top position. I'm going to go to the 15 here. Basically, I walked away from the charts here, and this took a while to get there, but it does eventually go, and there. So that is TP hit for us. So very simple, very rule-based, and yeah, really not much to it. There was a few other entry opportunities here as long as you had your direction right. So right at the top where I entered, so here is a prime example of our inducement being liquidated, and once again you create this leg after the inducement gets liquidated. So 50% of this leg constitutes another entry. So that would have been an okay entry as well. If I remember right, there was some sort of DXY divergence here. So somewhere in here, there was an entry too. So any one of those three entries in this area was fine. At that point, you wouldn't want to take any more entries, and I wouldn't recommend stacking more than one here. What we want to see is when this buildup goes, the momentum needs to sustain. So we don't want to be holding a bunch of risk or taking extra positions right away. So here we can get risk off, and now we can take this stack without holding risk on two trades. I believe this was the other trade you could have taken for a stack here. I don't love it, but it does work out. But the stop is nice and small, so you could still get a 5R out of it. Anywhere below this leg, I probably wouldn't be interested in selling. Reason being too is once we hit the reversal timings here at 7, we can see a pullback. Obviously, it didn't do it that day, but yeah, anyone that got in lower kind of got screwed, likely lost or break even. But what happened here where price went sideways and came up can happen with these entries. That's why I don't like holding these stacks. But yeah, I hope you guys enjoyed this and you learned something. And as always, I will see you in the next video.